This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Hello and welcome to the Research Talks podcast here on Stock Box with Alan Green. So it's good to be catching up with you again, Alan. How are things? You say you've had a pretty busy week so far.
It has. It's funny, isn't it? You know, if you have a week where everything's planned out, and then sometimes some of those meetings or appointments drop out, and it drifts along. And yet, I've had two, what appeared to be fairly quiet days yesterday and today, and it's just gone mental. So, but in a good way, because we're putting together announcements for our clients, and things are looking very, very good indeed. And I think what we've seen,
certain stocks are up, aren't they? I've noticed a lot of sort of stocks are up quite significantly this week.
Yeah, well, I was talking about this earlier to somebody, and I think what we're seeing is because we're seeing the inflation rate fall further than expected, and of course that means maybe finally that the Bank of England's blunt sledgehammer approach of raising interest rates is actually working. So of course with that you'll see a jump in expectations, and also people may be thinking, maybe the higher, maybe decent sort of or relatively decent rates for funds on deposit will be finishing soon. So time to get back in the markets. Where are the bargains? Of course, they're seeing lots of companies, that we're looking at and talking about that are really undervalued, and they have valuations that simply don't reflect the turnover, the net asset value, and what's being done behind the scenes. And certainly, we're going to talk about one today. It's very much in that camp. But that's where we are.
Indeed. Well, let's talk about some of these potential opportunities then, Alan. We'll start with Acuity Risk Management, and then we'll talk about Cadence Minerals. But of course, Acuity, well, you can tell us all about it, but they had some good news just this morning.
Well, they did indeed. I'll come to that shortly, if I may. But Acuity RM, of course, basically evolved from Drums PLC, DRUMZ, and of course that was an investment company that acquired a stake in Acuity to start with, and then has increased the stake, and then of course the company has basically now used it's reversed into Drums. Now Acuity RM Group, Risk Management Group, ACRM is the EPIC code, and they've had a very strong start. We look at the share price this time last week, it was 6.5p, and here we are at 7.4p. We've already seen 10p this week, and I think by the way they seem to be signing up new clients, there could be an awful lot more to come. But the company specializes in GRC, or governance, risk management and compliance software, and you can almost see people's eyes rolling back in their sockets. When you talk about this sort of stuff, it's boring, mundane stuff on the one hand, but on the other hand, it's an extremely important cornerstone for companies operating businesses in a regulated environment nowadays. And with everything online, you need an infrastructure that's both secure and gives you the reporting parameters that will enable you to fulfill your regulatory obligations. So in that regard, Acuity have the Stream software, which is an award-winning software package, and they sell the business in various different ways, which I'll come to shortly. But this market they're selling into, the government risk management compliance market, it's a pretty big market globally. It was worth 14 billion last year, 2022, expected to rise to 27 billion by 2027, and that's simply reflecting the fact that with everything moving online, of course, everyone is now obligated to have an infrastructure and an environment where everything is in line with the correct governance codes, managing risk, and of course ensuring compliance with the regulations within that particular industry. So Acuity is selling into this marketplace. they sell through licensing software where Stream is sold as software as a service or via private cloud delivery, and this is typically over 3 years with a 3-year license. They also have with that professional services which is consultancy, design and build, and then of course test and handover, and that operates on a subscription service, or it can be fees up front, or however it's packaged. So currently the company sells mostly in the UK, 67% in the UK, 15% of its sales in Europe, 15% of its sales in USA and Canada, and the rest of the world is 3%. But I suspect that's going to change quite dramatically. The company was founded by Simon Marvell, founder and executive director, who remains a major shareholder. Of course, Angus Forrest is chief executive, and Angus is well known for bringing companies to market over the years. And Simon, it was announced on June 23rd that Simon has stepped down, although he's stepped down from the board, but he remains a consultant to the company. And the former chief ops officer, Kerry Chambers, who Mark, I believe you just you interviewed the other day, Kerry has stepped up to the role of chief executive, and I think the job she's done as chief ops officer qualifies her very well for that. So it's been a busy few months for the company in its evolution onto the market. We had final results up to March 31st. That was announced in May. Revenues of 1.76 million, margins of 92%, renewal rate up to 96% from 82% previously, and a decent sales pipeline of about 4.3 million, which was basically double over the previous year. And since those results were announced, we've seen a number of new partnerships, a number of contract wins. May 30th, the company announced a new partnership with Netitude to integrate Stream into its cybersecurity solutions. Then on June the 9th, a leading British insurance company adopts Stream as its risk and governance and compliance software. And then today, Mark, as we said at the start, that big step forward for the company. And indeed, the share price is up this morning on those results. It's up nearly 4%. The Stream has been selected by the British government with a 3-year contract that's worth nearly £390,000 over 3 years. And there's an option also to take a 4th year at 125,000 as well. So that's really strong money. But I think also the fact it's with the British government, that's an extra feather in the cap for Kerry Chambers and the team. And I think as often happens when you win clients like the British government, then other governments will sit up and take notice and look around, and other government bodies. Acuity may well find that they're springboarded into be able to tender for other contracts within government departments. So either way, it's a really good start for the company on AIM. And currently the company's got a market cap of just under 9 million, which is pretty modest, I think, given the business they're in. So I think we're going to see great things from this company over the next few years.
Good. Well, thank you for that, Alan. It's always nice to see, like you say, a contract from government. We saw what happened with Harland and Wolff, didn't we, when they got that contract from the government. It is a big feather in the cap, like you say, because, it's just gives a lot of credibility, doesn't it, I think, to whatever the company is offering. Of course, the government, they can just invent money. So, there shouldn't be a shortage of being able to actually pay for what they've done. But also it helps, give credibility to perhaps other government departments or other governments around the world. And Kerry, very clear, they want to crack on in the US market. So that would be fantastic if they could do that. But I mean, a great start. I spoke to her this morning. The interview has gone out. This is Thursday. We're recording this,
Yeah.
and I asked her about how this is their first sale since IPO, and they're very, very happy with this deal. It's exactly what they want to be doing. So I hope they carry on and and get more of those deals, because ultimately with a company like Acuity, software as a service, it really comes down to getting those contract wins, doesn't it? It's almost as simple as that. Just you got to get the sales in.
It's a pretty binary investment
Mm.
proposition, really, isn't it, Mark? On that basis, and I think that's it. But also, it's a very easy to understand business. It's all about selling the product that you've got, and they're selling into a very strong market. And I think those numbers that I gave, the majority of the businesses in the UK, 67% in the UK. There must be huge opportunities in the US and Europe, and I'm sure that British government contract will be a pivotal factor. If you're talking to clients, overseas or in the US or whatever, and you can say, well, we've just won a 3-year contract with the British government with an option to extend to a 4th year, anyone's going to sit up and take notice. And I think that's going to open a lot of doors for them that they might have otherwise have found difficult to even push ajar.
Indeed, and one of the things that I picked up when I spoke to Kerry this morning was I did ask her, because obviously with government they will put out a tender. They won't just go for one, so they will have presumably had pitches from a number of different companies for
Yeah,
these solutions. And I asked her, what did they give you any feedback as to what they liked about your offer? And she effectively said, yes, the team that Acuity have, the fact that the team knows the customer's needs was a big selling point for them. So they really do know their customer, and they can almost tailor or custom sort of set the software
mm,
to the customer's needs exactly. So it's quite customizable, let's say, as opposed to some other solutions. But also they can integrate it very quickly as well, which I think is another big selling point. So yeah, they're fairly new onto the market. They've got off to a good start, haven't they? So onwards
they
and
have.
upwards. Let's see how they go.
Yeah, they have. No, 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 really strong start for, and it's great. I think in terms of the evolution of the board, that of course Simon has stepped to one side, but Kerry seems to have come of age over the past 6 months. She's really taken the proverbial bull by the horns, and is stepping up to the plate to be a very strong CEO indeed. So I think. Yeah, sometimes with the company, you've got the product growth, you've got the additional exposure of being a listed company, and a very strong sales team and a good product behind it. And I think Acuity's got all of those, and I think they look extremely well positioned to really grow the company quite substantially over the next year.
Well, let's watch them and hopefully do that, Alan. Thank you very much for presenting that to us this morning. So let's move on to, well, mining, away from tech and into mining with Cadence Minerals.
Into mining with Cadence. Yes, indeed. Well, we have spoken about Cadence before, Mark, of course, and Cadence is well, it's seen a strong recovery in the share price this week, but from I think ridiculously low levels, and anyone that's been investing in Cadence, they of course raised a substantial sum of money last year at about 20p, and here we are now at 8.8p, less than half of that. So, but of course the share price has been lower, but it has started to recover. But I think that's probably as much as anything to do with the fact that we're in this. We're seeing inflation start to come down, and investors possibly return to the market and looking for companies that are bargains. And I think a research note that was published by Edison on behalf of Cadence recently really sums that up. So I'm going to go through the constituent parts of the company. Cadence, of course, is run by Kieran Mazaria, chief executive, and Kieran has been at the helm since the company evolved from rare earth minerals some years ago. And it's always sought to identify projects that have growth potential, and projects that are both at early stage and also at late stage. And in that regard, it's got a portfolio of unlisted assets and a portfolio of listed assets. So of course it's very much the sum total of the parts that the company should be judged on. But the company, I believe, really pulled off a masterstroke back in 2019 when it identified the Amapa iron ore project in Brazil, which of course is currently the company's flagship project. And a mapper is currently, it was a mine that was discovered in the 90s, and the first ore was exported in 2007. By 2012, under the ownership of Anglo American, the mine was producing 6 million tons of iron ore concentrate per annum. And at that point, the mine and infrastructure was valued by Anglo American at $600 million on their books. There was a subsequent failure at the port, which was partly, that's the port at Santana, which was partly rehabilitated. And the company, due to the low iron ore price and various other factors, went into administration. So from that point, the company went through a series of processes where, through an initial investment of $2.5 million and a 20% stake in the mine concession, the railway, which is a railway that takes the iron ore to the port and the port itself, Cadence was able to bring the business out of administration through approval of the recovery program, but by the judicial services there. It was granted a railway concession. Settlement was agreed with secured lenders, and the company Dev, which is the local operating company, was transferred to the joint venture company, of which Cadence obviously currently owns 20%. Then the second stage, all those conditions were fulfilled. Dev was granted the key licenses necessary to recommence mining and to continue exploration. A further $3.5 million went in, and on the back of that, the company has the first right of refusal to increase its stake to 49%. So if you think about that, Cadence Minerals, UK AIM-listed mining investment company, has the potential to own 49% of a business that was valued when it was in production at 600 million. And I think that gives you some idea of the scale of the valuation disconnect here. So the company has also undertaken a pre-feasibility study, and as a part of that, a mineral resource estimate has been undertaken, and it's been established at 276 million tons at 38% Fe or iron, which is iron ore, which is a fantastic number. Maiden ore reserve estimates of 196 million tons at 39% iron ore, and with the PFS completed, the net present value was just under $1 billion, $949 million, with huge potential to expand the mineral resource and the mine life. So, as part of the process, of course, the port at Santana has been rebuilt, and through work undertaken as part of the PFS and the survey, Cadence identified that a scoping study at the port of Santana, as part of the refurbishment, they've identified cost savings of circa $28 million, which equates to about 25% of the direct capital expenditure associated with that refurbishment. And that involves moving the current rail loop into a different area and improving the efficiencies of the loading process. The company also announced back on the 26th of May, it had agreed a $2 million loan facility with a facility to increase that by a further $8 million to be drawn down over the next 3 years. So in other words, there's funding in place to complete all the studies and bring the mine back to production. So it's a big step forward, and this was noted, of course, in the note that was published by Edison Research, and this was published on 6th of July, so a few weeks ago. And it said, Edison said at the outset, it's a mining-focused investment company unlisted investment assets, and obviously I've not covered the other investments yet. Its portfolio of public equities accounts for 10.2 million of its 12.7 million market cap, leaving an implied combined value of 2.5 million for its 30% stake in the Amapa iron ore project. So currently the market attributes, well, with the rise this week, that's gone up a bit, but attributes maybe 3.5 million for that stake in the Amapa iron ore project, which is a complete disconnect. It's daft. And they say that with the combined with the other investments that Cadence has, the base case valuation should attribute a valuation of 45 million or 26 pence per share to Cadence. So with everything combined, a 32.2p per share valuation, which is more than 4 times its current valuation, with a high case valuation of 57p a share. So that's the picture and the view from Edison on Cadence, and in particular the potential at Amapa. And of course, Amapa is going through these various stages of development, it's hugely important for both the region, obviously the mine itself, and the region too. Also worth noting that with the Amapa package at Santana, there were piles of iron ore pellets ready to be delivered. And there have been several shipments already of those pellets bought by big steel furnaces and buyers around the world. So the product is known, it's valued, and it's used out there. So there's a ready-made market there to plug to plug a newly recommissioned Amapa back into. So on the company has other holdings. It owns 6.8% of equity in European Metals Holdings, and European Metals, along with the East European utility giant CZ, owns the Sinovac lithium and tin mine, which is on the Czech-German border. And there have been many developments there over the past few years. An NPV there of 1.94 billion. It's going to be hugely important. I mean, the Sinovac will be a hub for the European EV industry. Of that, there is no doubt. And indeed, there are now plans to build a lithium plant or a lithium battery plant close to the Sinovac mine. So, that's pretty well done and dusted. Now, Cadence has 6.8% of European Metals Holdings. So, and that's in the direct equity market. So that's very easy to value. Then in Australia, listeners may well have heard of the Yangibana Rare Earths Project, one of the most important rare earths projects outside, which has also attracted Australian government funding support. This is going to be a key supplier, and Cadence had some assets there, which is now converted into equity in the operating company, Hastings Technology Metals. So it owns 1.9% of equity in Hastings Technology Metals, which is, of course, an ASX-listed company. And then it's also owned 8.7% of equity in Evergreen Lithium, which is now listed on the ASX under the EPIC code EG1. Evergreen Lithium owns the flagship Bino Lithium project in the Northern Territories, and this is adjacent to Core Lithium's producing lithium mine, and a lot of the geology in that area is contiguous with the geology found at the Bino Lithium project. So that's extremely exciting, and certainly the findings there already indicate that there's quite a bit of lithium there to be found. They also have the Kenny Lithium project, which is in Western Australia, and again, substantial numbers of outcropping pegmatites there. Now, Cadence is the largest shareholder in Evergreen Lithium. It owns 8.7%. So again, it's got direct exposure there on the ASX to any changes in the fortunes of that company. We then move to Mexico, where the company is Cadence is a 30% JV partner at the Sonora Lithium project. And of course, listeners will remember the Bacanora Lithium story. Bacanora Lithium, of course, was bought out eventually by Ganfeng Lithium, the third largest lithium compound producer in the world, um, estimated to be 8.8 million tons of lithium concentrate resources at Sonora, and also a further 4.9 million tons on joint venture areas. And of course, this is where Cadence has that interest. The net present value of the entire project reckoned to be $800 million, battery grade lithium being produced there. Of course, there have been some difficulties there with the Mexican government, but I think those primarily relate to new companies wanting to set up operations in the area. They don't relate to existing companies operating in the area that have developed assets. So that, in summary, is the Cadence Minerals investment proposition. As I say, currently trading at 8.8p, giving it a market cap of 15.8 million. Versus what Edison say should be a market capitalization of 45 million at least, and possibly higher with a higher stake valuation. Cadence's stake in a mapper, Edison say, is worth 21p alone, so it just isn't reflected at the moment. So Cadence currently has a value there in the mapper at its current valuation of 37 million. So I think you take that into account, there's still a fantastic opportunity for upside in Cadence. And of course, you've got this with many mining companies, you've just got a single project or maybe two projects. With Cadence, you're exposed to a number of projects, all at different levels of evolution. So it's almost like a mining fund. I think that is what sets the company apart. And as such, I think, the risk or the potential risk in the company is much lower because of that spread of risk. So I think currently there's great value on offer at 8.8p.
Well, there must be, mustn't Alan? So the current market cap is what, 15 million, or nearly just under 16 million there. And you said, where was that 37 million figure come from?
Okay, so if you go to you can go to the Brand UK website or go to the Cadence Minerals website and go to the Cadence page. You'll see a link to the Edison Cadence Minerals a mispriced miner link, and the story is there. So it's just Edison's risk-adjusted for a stage of development valuation of the 5.2 million tons per annum Amapá iron ore project in Brazil is 122 million sterling, with Cadence at 30%, currently 37 million, or 21p a share.
And that's just on the Amapá.
That's just Amapá. Never mind the other investments, and the other investments apart from Sonora are all listed entities. So you've got Evergreen Lithium, you've got Hastings Technology Metals, and you've got European Metals Holdings with the Sinovic lithium project.
Indeed.
So those are already realizable investments, and I think that's the thing. It's just not reflected at all.
It doesn't seem to be, does it, at all? And if I had a quick look on the Cadence website, I mean, the infrastructure that is there, well, it's clear on the homepage. There's photographs of the site, and you look at the rail as well, and going to the port. I mean, it's not a small operation out there. They just need to get it sort of back up and running, back commissioned again. But there's an awful lot already there. We're not drilling holes in the ground here. Far from that.
Well, no, but of course they have done the scoping study there and the work for the PFS, and that has identified further iron ore resources in the ground. So there is the potential, of course, to find further iron ore in the area once existing supplies run out. But not only that, they still have stockpiles at the port in Santana ready to be shipped to market. So it really is very much a going concern. I think once the project, I imagine what will probably happen is that just as we heard earlier this week, of course, Rio Tinto invested $40 million into Sovereign Metals Cassia rutile and graphite project in Malawi. I would imagine maybe even Anglo America might revisit and look at what's been done there, and they may decide to take a stake, or maybe Rio will come back, or maybe Vale, the Brazilian mining giant may come and take a look itself. But I'm sure either way, the value will be realized in the mapper probably before it becomes recommissioned.
Yeah, indeed. Well, that's good. Thank you, Alan, for giving us that investment case. Hopefully we can get Cadence perhaps on Stockbox and see if we can sort of understand the story a bit more and what's to come news flow wise. But thank you very much for giving us the investment case there for both Cadence Minerals and Acuity Risk Management. And we'll talk again in a week's time.
Thanks, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.